This is David Talbot. I'm CTO of WorkMovr. I'd like to explain what we do in WorkMovr with international financial transactions. First of all, international financial transactions are optional both at the channel level here, which currencies we support, and we support the 8 major currencies. And secondly, at an individual data page level, you can put in whether or not you want currency conversion on that particular transaction. So here's what we have, a list of transactions here. And you'll notice here that we have a transaction date, and we use Fixer as the international currency service. And Fixer has historical transaction rates or conversion rates. And so you put in a transaction here, say December 28th, and we pick up from Fixer the previous night's closing price, okay, from December 27th. And so this more as an accounting type of situation. If you wanted to do a trading situation where you wanted intraday rates, then we would need to do some adjustment to this program. But this is set up more for an accounting transaction. And so here we have, base currency, we put in 20 Australian dollars, and it came out as 14 US dollars and 12.79 euros. And now we do the update of the international rates asynchronously using the asynchronous subsystem. So after you put in a transaction, it takes on average just slightly less than a minute before we've gone out to Fixer to get the international currency rates. And that means that we are not held up on the data page if Fixer is slow or something like that, okay? And so let's have a look at a detail, okay? So here we put in an investment outlay, and on 12/28, an Australian dollar, negative 20 Australian dollars, okay? And we completed the foreign exchange with Fixer, and we did it on the 27th, okay? And so here, the Australian dollar is 1-to-1, obviously, because that's the base currency. But if you look here, 1 base to X, okay, so 1 Australian dollar is 72 cents US, or 1 US buys at 1.38, $1.38 Australian. Or you could say, for instance, 1 Australian dollar is worth 0.66 of a Swiss franc, or 1 Swiss franc buys 1.5 Australian dollars. And then to save, you make it a little bit easier on data entry. In the transaction types, you choose a transaction type, and whether it's a positive or negative transaction, we set up in the template. So you're not confused as to whether it's a positive or negative transaction. We're using this more for investment portfolio management. And so you have, like investment outlays, investment returns, mark to market, but it can be for regular transactions, invoicing transactions. In fact, we have a client does, daily transactions to the Mexican peso, for instance. And if there are other currencies, obviously they're fairly easy to add because Fixer does all the currencies. And then if you look at the transaction table, we store all the transactions. So, the transaction, it needed the foreign exchange update. It was completed, on average, just less than a minute after you put in the transaction. The close of business date here was the 27th. So there was the day before Monday. It was Monday close of business because it was a Tuesday transaction. And the Australian dollar here, because in this particular case, we're doing Swiss francs, but this is the one we're looking at here. And so the Canadian dollar amount is 0.92. And so that means that 1 Australian dollar will buy 92 cents worth of Canadian. And so these transaction amounts and rates are stored. Okay. So thanks very much. Bye-bye.